What if I told you that you might be throwing away thousands of dollars every year without even realizing it? And no, I'm not talking about shopping sprees or bad investments. I'm talking about tax mistakes, costly, silent, and completely avoidable tax mistakes that are keeping you broke. If you're like most people, you think, I'll just let my accountant handle it, or the IRS won't care about a small error. Wrong. One simple mistake can trigger an audit, drain your bank account, and even land you in legal trouble. And here's the worst part. The government won't warn you. They'll just take your money. But today, I'm going to expose the biggest tax mistakes that most people make and how you can avoid them, because knowing this could literally save you thousands of dollars this year. So stay with me, because mistake number 5 is something even high earners fall for, and it's costing them a fortune. Let's get into it. Look, taxes are confusing. They're designed to be. In fact, the tax code is over 6,000 pages long. And guess what? The wealthiest people in the world don't pay more taxes than they have to, because they know the loopholes. But regular people, they overpay. They get penalized. They make small mistakes that snowball into big financial disasters. Today, I'll break down the most common tax mistakes, how they happen, and how you can legally keep more of your hard-earned money. Let's start with mistake number 1, the one that almost everyone makes. Filing taxes at the last minute. Meet Jake. He's a freelancer, makes decent money, but every year, he procrastinates on his taxes. The result? Late penalties, stress, and rushed mistakes that cost him an extra $3,000 last year alone. Waiting until the last minute increases your risk of forgetting important deductions and making errors that lead to costly penalties. When you rush, you're more likely to input wrong numbers, misplace key documents, and miss out on refunds. Plus, last-minute filing means you have no time to review your return for accuracy. Here's the fix. Start organizing your receipts, income statements, and deductions before tax season. Use a tax software or hire a pro early. Set calendar reminders months in advance to keep track of deadlines and ensure a stress-free filing experience. Mistake number 2, not claiming all possible deductions. Did you know that you could be eligible for dozens of tax deductions that most people ignore? Things like home office expenses. Yes, even if you work remotely. Mileage deductions for work-related travel. Charitable donations. Business meals and expenses. Skipping these means you're giving away free money. Keep track of everything and claim what's rightfully yours. Many taxpayers assume deductions are only for business owners, but employees and freelancers can also benefit from various expense write-offs. Even small deductions add up over time, leading to significant savings. Without proper knowledge, you might be paying far more in taxes than necessary. Actionable tip. Keep detailed records of all expenses throughout the year. Use a mobile app or spreadsheet to track work-related purchases and receipts. Consult with a tax professional to ensure you're not missing out on valuable deductions. Mistake number 3, ignoring tax-advantaged accounts. 401k, IRA, HSA. These aren't just random letters. They are legal ways to reduce your taxable income. Here's a harsh truth. If you're not maxing out these accounts, you're basically paying extra taxes for no reason. For example, maxing out your 401k could save you up to $6,500 a year in taxes. Wealthy people use these tax shelters every single year. Why aren't you? Many taxpayers think they can't afford to contribute, but even small monthly deposits can yield major long-term benefits. The money grows tax-free, allowing you to build wealth faster while lowering your taxable income. If you don't use these accounts, you're leaving free money on the table. Actionable tip. Start contributing to a tax-advantaged account immediately, even if it's just a small amount each month. Take advantage of employer 401k matches if available. Automate contributions to ensure consistent savings without effort. Mistake number 4, not keeping proper records. If the IRS ever audits you, do you have proof of all your deductions? Most people don't. Here's a tip. Keep digital records of everything. Use apps like Expensify or QuickBooks to track every dollar. No receipts, no deductions. Simple as that. Many taxpayers assume their tax return is safe, but audits can happen randomly, and without proof, deductions get disqualified. Poor record keeping can result in losing thousands of dollars in refunds. Having well-organized records also speeds up the filing process and reduces errors. Actionable tip: scan and store all receipts in a secure cloud folder. Use financial software to categorize expenses automatically. Review your records quarterly to ensure accuracy and completeness. Mistake number 5, thinking the IRS won't notice small mistakes. You might think, oh, it's just a small math error, no big deal. But did you know that even a tiny mistake can flag your return for an audit? The IRS loves catching people slipping up. And guess what? They don't have to prove you're guilty. You have to prove your innocence. Even minor inconsistencies can trigger penalties, interest fees, and a stressful audit process. The IRS uses sophisticated software to detect discrepancies, so even small rounding errors can be flagged. Accuracy is crucial when filing taxes to avoid unnecessary scrutiny. Actionable tip: double-check all numbers before submitting your return. Use tax software or hire a professional to review your forms. Compare your previous returns to ensure consistency and prevent red flags. Imagine waking up one day and realizing you've taken control of your finances, keeping more of your hard-earned money where it belongs, with you. Picture the relief of knowing you're not wasting thousands on mistakes that could have been avoided. It's not just about saving money. It's about building a future where financial stress doesn't control your life. You have the power to change your financial story, to break free from bad habits, and to set yourself up for long-term success. Start today, because the best investment you can make is in your own knowledge and financial future. If this video helped you, hit that like button and subscribe for more money-saving tips that could change your life. Drop a comment below. What's the biggest tax mistake you've ever made? Let's learn from each other and help more people avoid these costly errors. Share this with a friend who needs to hear it, because when it comes to money, knowledge is power. Thanks for watching, and I'll see you in the next video.